What can you trade as a forex trader, or what can you trade as a financial market trader? Number one, you can trade currency pairs. You can trade currency pairs, and currency pair is just currencies in pairs, in two. We have two currencies. You are trading one currency against the other. Don't forget that we defined in the previous class that um, forex trading is when you buy one currency and sell another currency at the same time for the purpose of making profit. Period. Or let me say it this way. Let me say it in a better way. Forex trading is when you buy one currency and sell another currency at the same time electronically for the purpose of making profit. That is forex trading. So now we have it here. We have currency pairs. We have Euro USD. The one on your left is called the base currency. The one on your right is called the quote currency. Then we have the GBP. That's Great British Pound. Versus against United States dollar. Usually, the first two letters is the name of the country, and the last letter is the name of the currency of that country. We have United States dollar, United States dollar. Then we have USD JPY, Japanese yen. The first two letters talk about Japan. The last letter talks about the name of the currency of Japan, which is called yen. Yen. Then we have, like for example, I was making an example yesterday. I said USD yen, United States dollar versus Nigerian naira, and then you have AUD USD, Australian dollar versus against United States dollar. Then we have NZD JPY, United States New Zealand dollar, New Zealand dollar versus Japanese yen. So this is currency pair that you can trade, and they are endless. You have a lot of them. We have the major currency, you have the minor currencies, currency pairs, and we have exotic currency pairs. So these are what is tradable in the forex in the financial market. Now, the second one of them is what we call stock. Many people are not exposed to trading stock, especially in this part of the world. Honestly speaking, you find very few people who trade stock. I used to trade stock before. Okay, I used to trade stock a couple of years ago, like I was explaining to you yesterday in class. I used to trade Apple and Google and Alibaba. I used to trade Alibaba. I remember I used to trade Alibaba. Enter, I can be on it month upon month. So it is possible to trade stock in on the same platform where we are trading gold, where we are trading GBUSD and USD and currency pair. It is possible to trade stock also. And so like Apple now, this AAPL, then you can trade Tesla. You can even buy, like now, there's one app recently that I bought Tesla. Yeah, I bought Tesla shares now. I bought it since over 6, 7 months now. The thing is appreciating. It's appreciating. I bought it. Yeah, it's been a while. I bought it. Okay, okay, okay. I remember I bought Tesla share um when when there was attempted assassination on Donald Trump, and few days later, Elon Musk declared his full support for Trump, and that time we knew that Tesla's stock was going to jump up. So I bought Tesla shares that time, just very little actually, and so it's something you can just like that one. I wasn't trading it. I just bought it as an app there. I just bought Tesla stock on it, and Amazon. You can have Amazon here. You can have Google. You can have Alibaba. Like I was telling a story in the last class. I said it was Alibaba when I was reading Alibaba in 2019, 2020. It was through the chat I got to know that something was wrong. In fact, I got to know COVID-19 via the chats because we're trading three stocks. We're trading Apple, we're trading Google, we're trading Alibaba. And I discovered that look, the chart that was bullish before started coming down. What I told the team then was that we're going to enter Alibaba, going to enter that stock and be there for about 11 to 12 months because it was after I celebrated one birthday and I told myself, look, I'm going to enter another stock. I'll be buying this stock to celebrate the next birthday. And so we're going to be there for 11 months, so thereabout, 11 to 12 months. So we entered around November and then we're there till April of the following year. So I discovered that why this thing started getting bearish? It has been bullish now. Why is it coming down? Why is it coming down? And I discovered that look, so one day I woke up in the morning and I was supposed to quickly go to the office, check the chart, and then communicate with the team. My team, we were trading together, and the TV was on in the sitting room. The CNN, I think it was CNN. CNN was on, and I started hearing, "Oh, pandemic in China, pandemic in China." So I paused. I said, "Oh, pandemic in China. Little wonder. Alibaba is situated in China. How like little wonder the chart started coming down." So I quickly rushed to the bedroom, took my bar around to the office, then we closed the buy trade, and then we opened a sell, and then we made profit buying and made profit selling. So selling stock is also possible in on your platform, the same platform that we use to trade currency pair. I need you to understand that. Then we have the indices. Indices talk about the Nasdaq, USA 100. You have the S&P 500. You have the Dow Jones that is also tradable. I trade out of these three now. I trade this Nasdaq and Dow Jones very well. USA 100, USA 30, very, very well. So I like you to just get on your chart and check all of these things I'm showing you on my screen. Check Nasdaq, check S&P 500, check Dow Jones, see how they look like, look like. Search for Alibaba, search for Google stock, search for Amazon stock, search for Tesla, search for Apple, then all this currency pair too. I'm going to be giving you more on this. Search for all of them. You see how their chart looks like, then you can study them. Then next to that, we have commodities. Under commodity, we have gold, we have silver, and that's how they are represented on the chart. You may not see with some brokers, you will not see them writing it as gold, but you search for XAU USD for gold. You can also trade silver. Silver is getting more interested to trade in the recent time. We are XAG USD. Then you can also trade crude oil. Crude oil is amazing too. I know a few friends who basically trade crude oil. It's interesting. Then we have natural gas. Under commodities, you have the cocoa, you have the sugar, you have so many that can be traded. These are where commodity, so you can also trade commodity on the same trading platform, And next to that, you can trade cryptocurrency. Cryptocurrency, we're talking about the BTC, we're talking about the Ethereum, we're talking about the Solana, and so on and so forth. Different cryptocurrency out there that are tradable, different cryptocurrency, but there are platforms that only enable you or allow you to trade only crypto. So you pay so go there on your same broker, like the broker we're exposing you to now. My broker offer all of these instruments without exception, without expression. So we also have bond and interest rates. You have the government bond, you have the treasury bill, treasury yield. In Nigeria, we call it treasury bill. Like I was saying yesterday in class, say my grandmother trades treasury bill, and so what it does is I think they allow that to be done twice in a year. So I remember one of those times I was the one she sent to the bank to go and check, the treasury bill, to go and pick the form for her because she came to our place then. Then we have the synthetic indices. Beautiful, beautiful. This is one area where we're going to be making stupendous profit, and I promise you this market runs 24/7. I'm going to be trading on derivative synthetic on derivative platform. I'll be showing you how to open an account just in a moment. We're going to be trading the derivative indices so massively. This is one market that we trade with ease. I trade with fun. I trade with love and passion, because this market runs on weekends, runs Monday to Sunday, run every day of the year. This market does not sleep. It doesn't have holiday. So when you trade currency pairs, in Forex, opens 5 days a week. If you're in Nigeria, the market opens on Sunday evening around 10:30 p.m. and closes on Friday about the same time. So you watch your time, you say, okay, by 10:30 the will close on weekends. So your chart is not going to be moving. But I think with some brokers, the crypto market moves on weekends. Crypto market moves on weekends. So, but if you're trading currency pair by Friday night, everything is closed, and then by by Sunday night, everything comes back on, and then you begin to use them. So I need you to get familiarized with those instruments and see how they look like on your chart. So forex terms, the trading platform, candlesticks, pips and lot size, risk to reward ratio, take profit, stop loss. These are the things you're going to be looking at. Okay, bulls and bear, long position, short positions, and so trading platform, like I was saying the other time, a trading platform is a software or application that allows you to access the financial market, analyze price charts, place buy or sell trades. This is these are the platforms that you can use. They give you access to the market. They allow you to analyze the market. They allow you to take to place your buy or sell trade. They allow you to set the pending order and so on and so forth. So trading platform connect you with the market. You need to understand that you can trade the forex market is a global market. It can be traded from anywhere in the world. How do you have access to this market? You have access to the market by what we call trading platform. And then it allows you to view live price chart. Live price chart. It also allows you to buy and sell instruments. You can buy forex, you can buy gold, you can buy indices, you can buy crypto. Then it allows you to set indicators. I'm going to be teaching you how to use indicator. Use indicator and drawing tools. Manage trades. Can you to manage trades? Put your stop loss and put your take profit. And can you to monitor your profit and loss? Can you to trail your stop loss or trail your stop loss? Like if you're in a trade and you don't want to exit it, you can literally be following the trade. Analyze market history. It helps you to analyze the market history. Able to analyze the market history. So the trading platform I'll be exposing you to in the course of this training is MetaTrader 5, MetaTrader 4, Trading View, and C Trader. MetaTrader 4, MetaTrader 5, Trading View, and C Trader. But basically, I'll be exposing you to MetaTrader 5 and Trading View. MetaTrader 5 and Trading View. I don't want to bug you with the strength of learning how to use MetaTrader 4. I don't think it's necessary any longer. It is overdue. Is high time I scrap it from teaching, from explaining it to my students. Okay, in fact, let me delete it now. Okay. So MetaTrader 5, Trading View, then C Trader. MetaTrader 5, Trading View, and C. But don't forget the fact that MetaTrader 4 still exists. So there's nothing wrong in using it. Just that MetaTrader 5 is more upgraded, much more flexible and easier to use. I remember just a couple of days back, I was trying to take a Pro Firm account and the broker only used MetaTrader 4. And for the period of time I was trying to use it. It was annoying. It therefore was annoying. It was annoying. I felt like when was the last time I used MetaTrader 4? So we have MetaTrader 5, then Trading View, then C Traders. Okay, so if you come to MetaTrader 5, it looks like this. This is how it looks like on your chart. It looks like this on your chart. You can have it on your phone, you can have it on your tab, you can have it on your laptop, you can have it on your other bigger monitor, like the monitor I use, to trade. This is my Curve 49 inches screen. Very lovely. You can have it on your phone, on any device. Is on iPhone, is on iOS, and on Android. It can be on any. So the candlesticks, and then there's something we call, if you go back to this place now, so we're talking about trading platform. We have spoken about trading platform. Then we'll come back to candlesticks. So candlesticks is the language of the market. you know it is the symbolic representation of price movement within a given period of time. You need to understand that in forex market, we are trading time against price. Time against price, and that is how beautiful it is. And you come here now, you see time period, you see the price is usually on your right hand side, while time is usually on the lower part of your screen. The price on the right. Some people can I think some broker can allow you to be able to change it to your left, but usually on your right. It's better on your right. Then you have your time, below the chart. And then you look at something like this. The closing price, the opening price, the filled part of the candlestick is called the body. The lower part is called the wick. The wick. The wick. The fifth part of the candlestick is called the body, and from here to here is the body. The price opens here and closed in this place. It's a bullish candle because the closing price is higher than the opening price, and then we have the body, and just like I was saying the other time in the last class, I was saying, look at the candlestick now, different body formations. Like I always say, candlestick anatomy. Candlestick anatomy. Look at this candle now. It's very small. The body is small. Compare with this candle. Then this one is like this one is like this, and this one is like this. So they all kind of have they have their symbolic representation. They mean something different from one another. And when you understand what they mean, they can always give you a clue to as to where to enter your trade and when to exit your trade. And that is going to make it very interesting, very, very interesting. Now, instruments are written like this. Instruments are written like this. One on your left, one on your right. I mean, currency pairs are written like this. We are always trading one currency against the other currency. So they are always in pairs. So we call it currency pairs, currency pair. And Forex is about buying and selling one currency, buying of one currency and selling another currency at the same time electronically for the purpose of making profit. That is what Forex is defined as. Okay, so you have it on your left. The one on your left is called your base currency. The one on your right is called your quote currency. The one on your left is called the base currency. The one on your right is called the quote currency. And then the price is always in four decimal places. The price is always in four decimal places. For example, look at this now: 1.4063, 1.4049, 1.4035. Usually in four decimal places. These four decimal places called the the peep. The peep. Look at it. The fourth one is called a peep. So if this one moves from, okay, let's say from here now, see here now. So we're saying when you see something like Euro USD, it means that the euro, the one on your left, the base currency, is usually having the value of one, and then you quote the second currency is called the quote currency. So what this means is that 1 euro has a value of 1.4 US dollars. 1 euro has a value of 1.4 US dollars. So if the price move from 1400 to 14001, we say the price has moved by one peep, by one peep. Price has moved by one peep. Price has moved back. So if price move from 1.4007, like the opening price there, and close at 1.4077, is if you subtract this from this, it will give you 70. It means the price has moved 70 pips within this time frame. Within this time frame, price has moved from 1.4007 to 1.4077. It has moved by 70 pips. It has moved by 70 pips. So the pip is a fourth decimal place, and when it is increasing, the pips is increasing. When it's coming down, the pips is coming down. Now, so there's something we have. Okay, maybe I should explain that to you later. So and then we have how currency pairs are written. I've said to you that to you earlier. When you have currency written, usually in three alphabet, three letters rather. So you have this USD, which the USD means United States, then the last letter means dollar. Then we have the euro, EUR, EUR. Euro is one of the names that does not follow the two letters of the name of the country and the last letter the name of the currency. It doesn't follow. Then we have the JPY, Japanese yen. Then we have GBP. We have the Great British Pound. Then we have CHL, Switzerland franc. We call it Swiss franc, Swiss franc. Then we have CAD, Canadian dollar. We have the AUD, Australian dollar, New Zealand dollar, and then they all have their nickname: the bulk, the fiber, the yen, the cable, the Swissy, the Aussie. I like this Aussie. That's when I trade AUD USD, you call it Aussie dollar, Aussie dollar, Aussie dollar. Then we have the NZD, which is nicknamed as Kiwi. Okay, now, like I was saying the other day in the last class, I was saying that United States dollar, USD, is the most powerful currency in all the world put together. The most powerful currency in the world is USD, even though it is not the most expensive currency, but the most powerful. After all, euro is more expensive than United States dollar. And then pound sterling is more expensive than United States dollar. But United States dollar, USD, is more powerful than any currency in the world. And so because it's powerful, it dominates. This is the volume traded. This is a pie chart representing currency distribution of reported FX turnover. This is the currency distribution of currency distribution of reported forex turnover in the market. So you can see that USD is taking the lead, followed by euro, followed by Japanese yen, followed by pound sterling. It therefore means that when you want to choose a currency pair to trade that will give you, quick volatility, that has strong volatility in the market, you should be juxtaposing between currency pair that has USD in it and euro in it, and then Japanese yen in it and pound sterling in it. So let's move further and show you something like this. You see euro USD, that's euro versus US dollar, euro ZAR, GBP JPY, Great British Pound versus Japanese yen, then GBP USD, and all of them like this. You have GBP CHF, all of them are tradable. All of them are tradable. I want to get exposed to all of them. Now, if I'm to give you major currency pair that I want you to focus on, these are the ones I want to focus on. Euro USD, USD JPY, GBP USD, AUD USD, NZD USD, USD CHF, United States dollar versus Canadian dollar. Now, all these combined together account for over 70% turnover in the forex market. What that therefore means is that make a choice of each of these. In fact, I want you to get familiarizing yourself with this instrument on your chart. Begin to familiarize yourself as you open account, and as you open account with a broker, begin to look for Euro USD. Look at the chart, see how it moves. Does it trend? Does it range? Does it stay bullish for a very longer time? In at the long term, what has been their average direction of this instrument? You look at them. Does it have gap? Does it what is the spread? Which all of these things are going to be explaining to you in a course of our training. Okay, so the next to that is, look at this. I think I've explained this before. I say euro USD. The one on your left is your value currency, your base currency, and has a value of 1. Then the one on your right is your quote currency, and then the amount is actually telling the amount we need to give to have a singular value of the base currency. So now when you have euro USD 1.4140, what it means is that for every euro you have, you are entitled to $1 41.4, 1.414 um, cents, of to get 1 euro, so that means is the value is more than 1, so that means euro is more expensive than USD. Now, let me, before I end this class, so that we can all be on the same page, and we all practice in the next class, and you have access to your trading platforms. I'd like you to go to our website www.apicts.net and click on these icons to sign up for your with these brokers. Sign up with these brokers. You click on www.apicts.net, you log it on Google, and then on Google Chrome, and then you scroll down, you will see these symbols. Click on it, sign up for Deriv, sign up for HFM, which is Hot Forex, and sign up for XNS. After you are signed up, then you just click them and follow the instruction. If you have questions to ask, just send a DM on WhatsApp or in the Telegram group, message any of the admin. They will guide you through on how to open your, and they will answer your question, and they will guide you on how to open your account appropriately. So XNS, HFM, this is Hot Forex before, but they have changed the name to HFM. Then you have Deriv, and I will continue from there in the next class. Most likely I'm going to be giving you another pre-recorded video